Hello, good afternoon, folks. Welcome back to another market review. Um, Today was rather a choppy New York session, and the initial rally from the 9:30, 10 o'clock, and then chopped the whole session until the last 15 minutes of the market. So initially, I mentioned the sell side here, which is the sell side for the 15-minute market maker sell model. I was thinking about market would be willing to go down there after taking out the buy side here. Didn't do so during the New York session. It just delivered almost an after hours in the last 15 minutes of the market. So let's dive into the 1 minute and let's try to tape read. Not tape read, but you get me. You know what? Actually, I'm gonna switch to the other layout so I don't have to delete and stuff. Cool. So on the 15, the S&P divergence is here, which is the sell side for Nasdaq. I'm gonna annotate the dealing range there, and then I'm gonna put the ray annotated as a sell side. Let's put it this way: 15-minute. Apparently, I wanted to see, like I said, turtle soup to highs, comfort below, um, but didn't happen the way I wanted it to be. So that's that. Anyways, so let's take a look at the market here. So here, this is the New York Open here. What we have is we have clean highs here, as you can see, kind of like relatively equal highs. So right there, let's annotate it with block and buy side. The reason I'm taking this buy side is basically because that is or was S&P divergence. So here, this was S&P divergence for the S. That's why I'm looking at those clean highs. So technically, this is the high you should be looking at. But because it's clean, I'm taking it from the higher. So that's the buy side. So at market open, here we had a dealing range, a short-term dealing range from the high, the low, right? Initially, this was not a swing low, but after 9:30, because it rallied, now you can consider this as your dealing range. Or in fact, you can also take a look at this one instead. But let's keep it here for now. And let me pull up ES as well. Oh, I need to go further. I'm on the 15, okay. Cool. So the same high would be these equal highs on ES. Let me annotate that as well. And as you can see, there is an S&T divergence at the highs here. Not that one though. Hold on, give me 1 second. Here, this one, which was the 15-minute S&T divergence. Again, this is not a divergence in on the 1 minute chart. Okay, I'll delete that. So at open, market did market actually formed an S&T divergence here. It is not the cleanest divergence, but it's still a divergence. So here, Nasdaq made higher highs, so unwilling to go to the sell side. Now you can look for buy side delivery as a Judas swing potentially because it's early in the day, and drawn liquidity is bearish because it is going. You can see the market maker sell model in this framework. So initial divergence happens within a fair value gap here. At the time of this delivery, what I was expecting was I wanted to see divergence here. Technically, didn't happen. So I wanted to see something like this. Something like this. so that we could have turtle souped this during the live session and longed it to the buy side here. And the stop loss would be S&T low, or you can use the fair value gap as well. So that was the first signature or sign of the market is not in alignment. Okay, this didn't form S&T divergence here. You can see it's rating the low altogether. But regardless, it sent the price higher, delivered the buy side, and then it went further into premium. So here, this is the premium of the, excuse me guys, 1 second. All right, I'm back. So this is the premium of the 50-minute dealing range here to sell side from the high dealing range. So it was the buy model, and the 1 minute was targeting the premium or range equilibrium. As you can see here, moving further, so it expanded first, took the buy side, formed displaced here, and in that displacement, let's see if there was an S&T average. So there's an S&T average. This is the long I would like to take here. As ES turtle soups the low, you can take that trade, and ES will be drawing to where? Now ES is in buy model, it's going to be going for at least towards the short-term buy side, right? But because there is equal highs, I was thinking about those highs, which was never timed. Hold on a second, let me leave that. Now those highs are very suspicious. It's going to be targeted later on. It's going to be original consolidation high when market turns bullish from bearish, right? Equal highs on the 15. So here the setup is longing this as ES turtle souping the low, stop loss below the S&T low, then you're targeting ES buy side. Once it takes out the buy side, you collapse the Nasdaq trade, or you trade ES instead. Then after market reached into the premium, so this is the premium, what happened was, let me annotate this sort of like this, the pace kind of died, so the momentum was lost, and in that price action it formed a bearish S&T divergence here. You know what, I'm going to change the color of these actually. Okay, so went for the premium, formed an S&T averages. Now you can look for the dealing range, which is from S&T low to high, came down to, so pulled back down into range equilibrium. Now it kind of chopped in the range equilibrium. I'm going to delete the higher time frame, or you know what, instead of deleting that, let's make it red, and let's make it a dashed line, not a dashed line, but just a line. So it kind of consolidated in between those two range EQs, right? But here the setup is there still because it's reacting off of the range EQ and unwilling to break down. Now you can say, okay, this is the setup I've been showing you guys. You let the first leg go, and the second leg pull back. Now the confirmation of the pullback is the reaction off of the range EQ. Now once it's you understand that it's a pullback, now you can target at least the short-term buy side. Now let's see what happened there. Consolidation here, and then let's check out the lows with ES. Now S&T. Here is an S&T divergence which was failed initially. Still delivered though. If you look at it, Nasdaq turtle soup, S&T divergence, delivered the short-term buy side. Okay, so that the rally also caused a new S&T divergence. ES didn't make a higher high, it made equal highs. Nasdaq made a lower high. Then it failed, came one more time to range EQ, and here took the low. ES also took the low, and there's no divergence, I believe. But what there is accumulation, SIBI. This becomes the trap. As market moves away from that trap, retest, so it touched that fair value gap, then tried to reach towards the buy side. But it failed at the end of the day because ES actually, I can't say took it. This is the ugly part. I would have liked it if it just traded one tick or two ticks above it. It didn't do so. It's just ugly, you know. There's nothing I can say about it. So once it does that, like you should be putting your stop loss below at least the order block here. Okay, so you would be getting stopped in profit regardless. So this is the long. Stop loss below the trap fair value gap, maybe here. Target high. It would have gotten stopped out here. So now you have a new SMT divergence. This is probably a 15-minute SMT. Price break below the higher time frame range EQ, right? Now this becomes a premium FVG. And once it breaks down below the range EQ, now you have what? Now you need to be looking at the smart money reversal area, which is margin consolidation. Now this is your sell side, should be targeted here. And also you can use this dealing range as well to go short. You wait for the range EQ to break down. With this candle it does, with displacement. Premium fair value gap gets up there one more time. And then further confluence. These S&T divergences here could be your trade. Taking a trade after S&T or as market forms an S&T divergence is the best thing to do, because you will be getting the smallest stop loss, and you wouldn't be confused about which fair value gap or which PDRA to use. So as you're watching the market live, for example here, ES is trading above. Now Nasdaq is not willing to, and it's in premium. Now what you can do is you can wait for one down close candle. Let's say you can wait the close of this candle, and you short it. The stop loss will be above the S&T high, and you're targeting the sell side. This is a scalp model, okay? And afterwards, it delivered the sell side. And one thing to note here, the sell side on ES is here. It didn't deliver, so there is an S&T divergence there. This is a 15-minute S&T, I would say. 5 or 15. So divergence on the 15. Let me see actually if it's 15 or 5. I don't know. Because it was way too choppy. Yeah, it's the 15. 15-minute S&T. And then, as you can see, price is accumulating after the formation of the divergence. Now, what's going on in that accumulation is you have a SIBI, flipped it, now you have a trap. The low of the S&T is now safe. Column zone, trap FVG, and this is the trap. Trap shorts. Now you have the S&T divergence here, which is going to be the target, because now market is in the buy model. It tagged the high and then collapsed. Now here it formed a new trap. So this is the SIBI, BC, I'm sorry. Violation of that BC. Now this became the trap. Trap fair value gap. The whole accumulation above it is the trap itself. So the highs are safe, or should be safe. Trap longs. And now once it's confirmed traps of this candle, trades one more time. Now you can go short there, and the target will be where? It's going to be the sell side. This is a 1 minute model. Okay, this is a 1 minute market maker sell model. It tags the sell side, and in this price action, it formed a new S&T divergence. Market was really choppy today. So let me annotate this as a sell side. Even like going through it right now, it's like so exhausting because so much was going on. There were like 1 minute setup after 1 minute setup basically, but range bound. So here took the sell side, also ES took the sell side as well, and then formed. So the move slowed down here, and in that move, the accumulation, it formed an S&T divergence here. This is, I would say, a 5 minute probably. So here's the S&T divergence. There's also S&T at the highs here as well. If you want me to annotate that, I'll just showcase it. Then there's this trap here. As you can see, like there were a lot of back and forth action. Now, one of these moves could be your trade, and you should be calling it a day. If you take, for example, this one to the buy side, call it a day. Don't look at it. Or if you're trading this one, you took the buy side, call it a day. Don't look at it. Okay, that's how you're gonna save your capital and your mental. So this is the trap fair value. You can also take this one if you want to. Now you have the trap here with S&T divergence. So it's forming smart money reversal on the higher time frame, and on the 1 minute it's forming a trap. Retest of the trap, delivered buy side. Now it was supposed to go above the buy side, but what happened was, I'm gonna annotate them because I need to send them in my channel as well. So this is the buy side now, or the target for the buy model. Now it failed to get above there, but what happened was ES actually took it. So that formed an S&T divergence probably on the 15 minute, I would say. Let's take a look at it. Yes, it is on the 15. And that, oopsie doopsie, what did I do? And that divergence caused the dump in the before market close, and it was delivered towards the south side on the higher time frame. Now in that rally, what we could do is, so you have the dealing range from the S&T high to the downside, to the south side, broke the range EQ, premium fair value gap retest, and that's the trade. But it happened in the after hours, so it's technically not a trade with the prop firms. And here was 90 points. So it was there. The market was moving today in a range bound market. It was range bound, but it was moving. Here. I don't know how I'm gonna post this in my channel, honestly. Let's delete this. Let me make this PD. So that's not a premium fair value gap, but it's just a premium area. Anything above this box is premium. Okay. This is range EQ. I'm going to annotate it till here. It's for the middle. Let's delete this. But let's keep this one. So it's not mistaken. This trap. Okay. Looks too much for my liking. Like while I'm looking at this chart, I'm like, oh my god, too much is going on. I hope you guys can understand this. So here, I think that was an S&T divergence. Let's see. You know what? I'm just gonna stick to the 1 minute. I'm gonna keep this 15-minute because it delivered the buy side. I'm gonna keep that one. Let me see if I'm missing anything out. There is this S&T here. Let's annotate that one. Alright, you can also use the low here because it broke down. You can use like that level specifically for executions once it breaks down. You can do the same thing with PM session continuation or something. So, for example, when market rallies like this, initially, then it overlaps, right? Like fades the move, breaks the AM low, right? If there is drawn liquidity down, like maybe here somewhere, what happens is it breaks the low of the morning session, retests that level, and that's usually the premium, respects it with bodies, and sells off. So if you get confused about like which fair value gap should I use, oh my god, the CE of the fair value gap is violated, or when you have a big candle like this one here, this is 25-point fair value gap, you can use that specific level. Okay. So hope you guys find this insightful. I'll see you guys tomorrow. I think tomorrow should be eventful, but I think the highest probability day of the week will be Thursday. I'm really hyped for Thursday. So here, let me change this. What I'm gonna do is PD. Hold on. Why do I have this? Wait, I shouldn't have this one. I should not have that one. Alright. Chop. Alright, let's take a screenshot of this. I mean, this is, again, this is way too much painting for my liking, but I'm trying to showcase to my best abilities. I hope this doesn't confuse anybody, but if it does, you should be watching the video anyways. I'm going through it in depth in the video, so make sure to watch these videos. Oh man, I'm so tired today by just watching this price. I'm literally feeling physically exhausted. Kind of overlaps, but let's do it this way. So here, what you need to understand is market moves, especially when it's range bound, it moves step by step. Okay, because there's a trap, the low should be safe until it delivers buy side. Okay, and here it didn't deliver, but ES did. Now, in the event of this breaking down, like for example this range EQ, now that's why I mentioned this, because it was broken down. Because it was broken down, now you're looking at the sell side. Now the trap short low is not safe. Okay, you gotta understand that. Here, same deal. Trap shorts until it delivers the buy side. Okay. Here, let me annotate. I forgot to annotate this S&T. And let's delete this. Oh no, that's not what I wanted to do. side. All right. So what I was saying is here, for example, trap shorts was formed until it delivers buy side. The low of the trap is safe, okay, until further notice. Now, because it took the buy side, then it formed the trapped longs. Now, once it breaks the range to the downside, here looking at this chart, sell side. Okay, now that sell side, the low is not safe anymore. Okay, here this candle breaks below it, premium fair value gap right there. I'm gonna annotate these because these things are very important. If you're shorting in this fair value gap or in this fair value gap, you're doing it wrong. You gotta wait for the premium fair value gap or premium for shorts, discount for longs. Here, this one breaks it, comes up to the OB. And it didn't have to go up the OB, but it formed an S&T divergence, so that's permissible. As it forms S&T, you can take that short. That is the best setup you can take. Same, just like this one. What else do I see? I think that's that for now. All right. So I hope you guys find this insightful, guys. I'll talk to you on the next one. See ya. See you tomorrow. Tomorrow's live stream.